growing. So we're gonna do it. We're gonna do it real quick. We got all our veterans on, so we're gonna go through the taxes, and I'm really gonna go through it. You guys got question answers, but I really want to get to the W-4 too because it's definitely the visual has changed, and I want you guys to look at that. So let's get right into it. Y'all know my statement, and we went through this before. It's several pages to the tax return. I don't do this so you guys can become tax professional. I just want you to be aware that it's about 9 to 10 new pages that comes with the standard taxes right now. Let me do this so I won't keep looking. I keep want to look at myself. All right, it's about 9 new pages that comes with the taxes. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, it's a little bit more. 11. Yeah, so it's about 11 pages. I threw it in the Schedule C. All right. So you guys, we know we went through deductions and credit before, so y'all guys know what those are, what the difference is versus deductions versus credits. All right. They both lower your tax bill. They both, but they work very different. And let me see if I'm gonna quiz you guys. Deductions does what? Because this is recorded, but I want you guys can chime in, so it'd be good at recording too. Deductions does what?
Lower your
Reduce
tax
your
bill.
taxable income.
There you go. How'd you know that? It was because it was on the screen.
Yep.
All right. Credits does what?
Reduces your tax dollar for dollar.
All right. Now we can argue which one is better. They work together. Deduction reduce your taxable income. Credit reduce your taxes. So whatever credit you get, it's gonna reduce what you owe. Whatever deduction you get, it's gonna reduce what your taxable income is. That creates your bill. So let's look at it real quick. Let's look at some deductions. Income is 60,000. Deduction is 10. Before I put it up, what's your taxable income?
50,000.
There you go. Ain't nothing about your bill, but this is your taxable income. All right. Here's some common ones. We're gonna cover this. Standard, itemized, mortgage interest, charity, QBI. That's a deduction that Trump gave a while back. Just you get 20% just cost when you made a profit. That's after all the expenses, student loan interest, home office, tips, overtime. We're gonna cover that. Those are some of the common deductions. Let's look at some credits. Credit reduce your tax bill, like you guys said. Regardless of the tax bracket, it reduce your tax bill dollar for a dollar. Give you an example. Taxes owed. That's not the same as your taxable income. This is what your tax bill is. When your taxes are done, and we say this is what you owe. So if you get a credit of 1,000, what is your new tax bill? Yeah, I'm asking y'all to do math.
$4,000.
4,000.
There you go, all day. All right. So that's the difference, guys. $1,000 credit always saves you $1,000. $1,000 in tax deduction may not save you $8,000. It's just going to reduce your tax income. I just want you guys to know that. So you get a common credits, child tax credit, earned income credit, and most of these are about children, but these are the common credits. Educational credit.
In about 2 minutes, if you got anybody else.
That ain't me. I got some background. That's me. Okay. Education rate. Lifelong credit and American Opportunity Credit. Dependent care. People with kids and they paying for child daycare stuff. Clean energy credits. Here comes some more non-refundable. These are two types. Non-refundable. They can reduce your tax to zero, but they cannot create a refund. Refundable. They can reduce your tax below zero, and if there's more, you get that in the form of a refund. Hence the word refundable. All right. So here's some deductions. Single. It's called the standard. Single, 16,100. You guys should know these. I'm gonna ask you guys, definitely remember this. Anything we talking about, we should know these. And we especially should know the single one. We've been on the train a long time. Why should we know the single one? Yep. I'm quizzing some folks. Why should
That's
we do
the single is gonna be the same thing that you'll be able to pay your kids.
There you go. Look, Derek batting 1,000, man. Derek batting 1,000. So yeah, that's the ultimate raise that we can get to use to pay our children and our grandchildren. That's the standard. That's the amount we can pay it if they fit the guidelines between 17 and below. It's tax free to them and the tax deductions to us. Married filing joint 32.2, married filing separate, the same as single, and head of household 24.15.
Hey, Alvin.
Commit that to memory. All right, those are standard deductions. Everybody gets them. Why it matters? Because high income taxpayers benefit.
Hello. Yeah, how many are we on the line? Just
All right. High income tax people benefit more from deductions. Lower income benefit more from refundable credits. And the reason for that, because the lower you get your income, most refundable credits are based off your income being lower. All right. So when you're making money, we need deductions. And if we're not, and we're learning the tax rules, lower incomes, we rely on refundable credits. But strategy is adding deductions to your situation, to your income, can unlock credits because it's going to reduce your income and make you get to that point where you qualify for those refundable credits. So let's talk about the tax deductions. Let's talk about them real quick. Car and truck, y'all know it. Interest, communications, meals, travel, and wages, and I'm gonna say 7 depreciations. And I think when we were talking about deduction, I think one of the guests said, "Hey, we really like those deductions." And then Terrence threw out the book, and I think Nick, she said about 475 deductions. All right, we're gonna do something else real quick. All right, y'all. I don't know if my little window is right there, so if y'all can see it. Is that the book we were talking about, Nick? Yeah, there we go. All right, the 475 is a lot, right?
It is.
Y'all come on, move. It's a lot. Let me throw something else at you.
Oh, get that.
You want to say that was 1,001? That was 1,001. But you know what the kicker is? What becomes before 475? What comes before 1,000? 1, 2, 3, 4, 5, 6, 7. 7. We got to get past 7 before we can get to 400. Do we understand that? So that's what we talk about the 7. Master the 7 so you can learn how to learn about the other ones. Once you get past 7 and you need more, there's more out there, but we talk about the 7. Let's go through them real quick. Car and truck, 7.25 cents a mile. And right now, I should have updated that for 2, but I think it's the same. Make sure while I'm doing training, I am definitely thinking it's the same. We're going to do it right now. We're going to do it right now. All right. We live in Memorex. Yep. It is the same. I just wanted to clarify because I know I kept it up here for a while. Didn't change my year. 72.5 cents a mile. Every time you do business, you know how it works. You go from your home to a job, and we're not saying quit your job is never deductible, but you got to go from your home to a temporary work location back to your job, then it's always deductible. So we want to create deductions that you've already spending the money for. We're just going to put them in a business format. Only way you can do that, you have to be in business. And the temporary work location, y'all know what those are. Wally Worlds, the Kmarts. I mean, nope. Did I say Kmart? They gone. The Dunkin' Donuts, the McDonald's. Everywhere you go, the Starbucks. Everywhere you go that you don't regularly work is a temporary work location. And then we can discuss how you can change it. But when you talk with someone, open up the conversation. Go to work after that. Don't stand there and try to give them a presentation. Just pique their interest and move on. That's a temporary work location because your job, your goal was to create a new customer or a new business partner. That means you work. temporarily at that location. And it's always deductible as long as your site is active. Yeah, I put it out there. All right, let's keep on going. Interest, loan interest on business purchases and car payments. I'm gonna put this note out there because this is one I need to put a blast. And this little special note that I got for 2025 to 2028, that's what we call one of the one big beautiful bill deductions. And this is just for personal. So I put it out there so we know. If you just want to take this deduction as a personal expense, you can write up to $10,000 a year on the interest on your new car. And the new car had to be bought in 2025. You got to be the first driver, the only driver for this to count. Can't be a used car. It actually got to be a new car. And you get to write off just the interest on the personal side. So I wanted to put that in there since we were talking about interest. Credit cards used for business. If you got interest and you use the credit card to buy business stuff, then yes, let's write off the interest because it's related to business. Purchases, all right, or payments. And what I tell folks based off credit cards, since I threw credit cards up there, I'm going to always advise that we write off the purchase. So that may eliminate the interest part. I'm always going to advise write off the purchase, not the payments to the credit card. All right, let's keep on going. We got plenty to go over. Communication. Who don't have a cell phone, guys? Everybody got a cell phone. Cell phone, internet. We're going to shift that. Shift the mindset. Shift your phone bill to business. Because before you was in business, you had a phone, but you weren't talking business on it. So you got to change your behavior. Now, who's to say that 20%, 30%, 50% of your conversation can't be business related? Easy. Easy does it. If they call you, you can talk business. So can't be 100% because you got one phone. I don't care if you got two lines. We done been to that. Want 100%, we got to get another phone. And the more expensive phone is your business phone. The cheaper phone is what you use personally. We're going to keep it going. Meals, 50%. Shift the income from eating out by changing your behavior action. Every time you get food that you can consume right now, make a contact with someone at that restaurant to discuss business, whether it be an invite or a presentation. Right now, I'm just talking about an invite. When you go out to eat, there's other people eating with you. If you go out to eat, somebody is paid to talk to you. It's the waiter. Give them a big tip. Say, hey, you do a great job. I got a wonderful tip for you. Keep them open, keep them motivated. At the end, give them an invite on what you can do and what you might be able to help them with. Collect the number. Now that business meal just became a write-off. Go to somebody else's table that's serving food. Excuse me, ma'am and sir. I help people who want to be helped save thousands of dollars on their taxes. If that interests you, and if we can keep an appointment, I'd like to pick up your tab. You know what? If they're going to keep the appointment, pick up the tab for their meal because you can write that meal off and your meal. Okay, y'all didn't hear me. Proper documentation. Who, what, when, where, and why. Cash flow management. Let's keep on going. Travel. We're going to convert business vacations to business trip. You know where you're going. Just don't show up and hand out some business cards. So when you plan a vacation, you know you're going. So let's plan the business trip. Make a contact with someone that's there. You may know them, you may not know them. I always use time sales persons. They're going to meet with you. They're going to keep their appointment. Call them up. And the reason why I said timeshare sales, because most vacations are around the beach. But I think they have time sales in Vegas and other places. Don't they have time share in Vegas? Yeah, they do. Yeah, they do. I just had to think for a minute. All right. You make a phone call. You call some popular areas. And you find the person that sells timeshare, and I promise you, they will have a conversation with you. All right. And once you finish having a conversation with them, you ask them to email you the time and the confirmation where you guys are going to meet. And as soon as that email is received, you just created a business meeting. Now, you're going to confirm the meeting before you arrive. So when you go there, you're going to meet. Drop your bags off, go meet with them, discuss see the venues where you can have your meetings and stuff at. Because we my econ, we can go anywhere. We can expand anywhere in the States. Share them while you talking. Share what you do. If they seem interested, that's a bonus. Right now, we're just trying to get the trip taken care of, but you got to talk to them. Then once you're at a meeting, go take care of whatever you got to take care of. Go vacate. So you're gonna keep the meeting, relax a while, and then follow up with them with another meeting before you leave. We bookending it. It is now a official business trip. Now, I'm gonna put a pause right there. How many of us can do that? Y'all talk to me. How many of us can do that?
Any of us could.
If we wanted to.
Any
We'll
of
put
us.
that out there. I guess want to is a question. If we want to do it, how many of us can do it? All of us can do it. All right. Wages. If we got kids, that guys, we paying the children. We paying them. Shift the income for what you was buying them. You pay them and they buy the stuff you was paying for. Shoes, after school stuff is not on the taxes. So what you might need, custodian bank account, create a job description, create a work schedule. You just want to be above board. You might want to research what your child is doing. You might want to research just so you can keep an account on, because it needs to be reasonable. You know, what are secretaries, what are administrative assistants, what is their going rate? All right. So what I've taught my kids, you guys know it. I taught my kids, hey, put in my cash flow manager. They can clean up on too, but I want to get them in, put in the expensive cash flow manager, and pay them by check or direct deposit. Not a big fan of Zelle, because the biggest proof of tax deduction is a council check. All right. And you might even want to provide a W-2. That's putting it definitely on top, because you can create a W-2 and it's very inexpensive. You can ask me, and it's very inexpensive to create a W-2. So all these put you above board, because if you actually gonna max out the 16,000 or get close, I think we want all these covered. All right. Let's talk about number 7, depreciation. That's anything you buy for your business, equipment, or computers, fax, all that. And all that stuff can be wrote off all in 1 year, or we can take the shelf life. All right. We got some other ones. We got advertising, supplies, commission and fees, rent or lease, legal and professional fees, 13. And I put these up here, guys, because that's what the Schedule C have the options. But my econ, from a standpoint, we just talk about the first 7, but there's other ones that comes with it. So we still ain't got the 400 yet. So we got advertising, anything you buy that's advertising, business cards, you buy some shirts, websites, all that's to advertise, supplies, anything you buying to help you market your business, books, magazines, anything that's helping you grow, supplies, commission and fees. That's your my econ fee. Now, if you're paying something, you may be getting out commission, but it's more like the fees that you pay for software that you're using. One of the main ones, of course, is my econ. Rent or lease, guys. I'm talking about that for if you're renting a car. If you got an office, great. I'm not saying you have to have one, but if you have one, that's part of written lease. Post office boxes, I'll put that under written lease. Legal and professional fees, I told you guys, once you start doing MyEcon from a personal standpoint, now your taxes is legal and professional. Your taxes is a business expense. Office expense, that's like paper, pens, ink. You guys know that. All right, let's get into I got some examples, but I'm not going to get into the examples right. I'm going to show you what this is what the Schedule C look like. And every time I show you guys Schedule C, I'm always going to put income. We always going to show income, because that's the goal. The number one reason to get in business, and y'all have heard it before, you ain't going to say it again. Number one reason to get in business is to make money. The deduction is going to show up, because you got to have the intent to create profit. So your number one reason is to make money. And if you search to make money, the deduction is going to show up. So let's look at what Schedule C. Advertising, 500. Commission and fees, we got $8.99. We got mileage that was about 5,950. We got depreciation. We bought some equipment, so it's 1,100. We got some legal tax preparation, 500. We got some office expenses, 250. We got some rent, 500. That might be the rental car, it might be P.O. Box. We got some supplies, that was 1,000. We got some travel that was $1,000. We got some meals that was $250. Utilities that was $1,200, and wages. We only use this is one child. We only put $8,000 for wages. So the total expenses is about $21,000 minus what we made. We now got a paper loss of $16,109, and that's gonna come off that person's taxes. They made 75, lost 16,000. That's their deduction. So they now due taxable income is 58,000. All right. So that's business with a loss. 75,000, 75,000, lost 16, new taxable income 58. All right. So we still got 58,000 right there, 11B. So remember that standard deduction we talked about? It's right there, 31.5, because this is a married couple. But this, so 31.5, this is for 2005. 2006 taxes is not ready yet. So any tax examples I give you guys is going to be based off 2005. All right, so 31.5, they new taxable income or they taxes is 188 for their business. 188. So let's go back, see if I can see what I show you somebody without a business. Without a business, they taxes was 2,546. Y'all see it. Y'all see the improvement. Let's go a little further. All right. This is how it flows. Profit and loss goes to the Schedule 1, goes to the 1040. Just I can just see how, so y'all see how the taxes flow. All right. Let's get to the bonus of stuff we're going to talk about. Hopefully we get through this. All right. I already told y'all the 2 types of credits: qualified business income, one big beautiful bill. So we seen about them. So here's some examples of the credit. I want you guys kind of know that 2026 earned income credit. You don't even have to have a kid to have earned income credit. $664 by yourself. If your income is low enough, you qualify for earned income credit. One qualifying child, $4,427. 2 qualifying children, $7,316. 3 or more, up to $8,231. Child tax credit is $22,000, $1,700 was refundable. Additional child tax credit, $1,750. That's any child under 17. Educational credits, $2,500, $2,000 is refundable. That means once you go to school, paying for college. All right, here's some non-refundables. All right. Lifelong, they reduce your income, not refundable. Other dependents, $500. Savers credits, you get $1,000 just for saving your own money, $2,000 if you're married. All right, child dependent credit, $3,000 or $6,000, but the max you can only usually write off is $4,000. They won't let you get past $6,000. They give you credit for $4,000. And here's the thing I want to put out: solar panels. How many people y'all know buying solar panels? Y'all come up. Y'all know, you just shake your head. Y'all know we buying solar panels? All right, solar panels, but they only eliminate the taxes. You do not get that refund. So just have that food for thought. All right. QBI, 20% of your net profit. So if you write off all your expenses and you still have a profit, QBI will give you 20% deduction off gate. So you had $100,000 profit, you still gonna just pay taxes on 80. You're just gonna pay taxes on 80 instead of 100. Qualified business income deduction. All right, let's talk about some more big beautiful bill. All right, it went through on July 4th, 2025. And here's some of the major changes. So state employees, state and local taxes. It was $10,000, and in 2026, this year, it's gonna go up by $400. It's gonna be $40,400. Let me show you what I'm talking about. Before I do that, let me tell you what else is going to change for 2026, next year's taxes, just because of the big beautiful bill. We're talking about itemized, and if your itemized deduction is bigger than your standard, the 31, the 16, that's when you can take charitable contributions. But this year, if you don't qualify for itemized deduction, I want you to understand that you can still take a $1,000 charitable contribution on a 1040 or $2,000 if you're married filing joint. All right, with a show of hands, because I went through that kind of fast. Do y'all understand what that means? All right, y'all come up, mute. We got a little more time. I want you guys to get this. Do y'all understand we're taking the charitable contributions without itemizing what that means? Up to 1,000.
I don't. I don't understand.
No, so you can only do $1,000 or $2,000 for
It
charitable giving.
ain't only now, but yes, I'm gonna say only. But what it means is, all right, let me put it this way. How much charitable contributions do you have?
Shit, I know more than probably $2,000. You know what I'm saying?
Okay.
You know,
All right,
yeah.
I got you. So since I don't put you on the spot, all right, let's do this. Let me go back here. All right, this is the itemized sheet right here. This is what it looks like. All right, this is itemized. So in order for you to itemize, so we can see the point of that new change, you got to have medical expenses that's over 7.5% of your total, your adjusted gross income. You gotta have it. Got to be over 7.5 cents. So if you making 100,000, your medical expenses got to start at over 7 for it to start count. To put on this sheet. Here's the other part: taxes that you pay. That's the part I'm about to show you. Taxes, state, local, all the taxes, state, local, and property tax, and then the interest, mortgage interest, and then gifts and charity. That's what we're talking about as far as gifts and charity. That's where you had to put the gifts and charity. All this page, all this got to add up more than your standard deduction. So I'm gonna go out on the limb, Derek, since you're talking to me. If you're a married man, your itemized deduction will be over $31,000. All right, your standard deduction will be $31,000, because I told you guys remember that. So for this sheet to help, and you get any charitable contribution, you got to first beat the $31,000. And most folks don't do that. Most folks don't beat the 31,000. All right. Do y'all understand that? Don't let me confuse you, because I want y'all to take one thing away from this.
Nah, so
y'all
I see what
understand
you're
between
saying.
standard and itemized.
Okay, so it's best to take the standard instead of itemized, because you're not gonna have enough
You ain't gonna have enough.
itemized to make it take effect.
Right, because you're gonna take the bigger number. But let me go back to this. So if you can't take it, you couldn't take no charitable contributions. If your itemized wasn't high enough, you couldn't take none. But because of 2026, you can take at least 1,000 and 2,000 and get credit for it.
Okay, that makes sense.
All right, did that make sense? Do we understand?
Say that again.
All right, so let me show you what the salt thing was. Here's one of the changes. In 2024, it was only 10,000. So this is the example of a real customer. So let's look at that part I told you. Taxes paid, state and local taxes. That's why it's called SALT. They had 14,000 in W-2 taxes. That's what they paid this. They paid the state. They had 7,300 in real estate taxes. They had 551 in car taxes. And you add all those up. I want somebody else to tell me what that number is right there. What's that number? How much was their total state and local taxes?
22,000.
I heard somebody say 22,000.
729.
Yep, 22,729. In 2024, what's the max they can take?
10,000.
10,000. So they lost 12, almost 13,000 in deduction because it was a cap.
Okay.
Now it's not one. In 2025, it was not a cap, and it's not going to be a cap for the next 3 years. So now let's look what their 2025 taxes look like. 14,000 in W-2 taxes. That's what they paid to the state. 10,000 in real estate taxes. 551 in property taxes. Add them up, it was 25. And because the cap was changed from 10 to 40,
They get all of it.
So they gained 15. So, and this is personal. This is just one of the effects of the one big beautiful bill. So that was a big deduction that they was able to recoup. Y'all see that? All right, let's keep on. Some other one big beautiful bills. Y'all guys know about overtime, tips, and loan interest. I just told you that. The no tips up to 25,000. A server makes $40,000. They got 18,000 in tips. Without the law, they'd be taxed on 58. With it, they get to deduct 18, and they only taxed on 40. Just because. All right. Overtime. I've seen a lot of examples of overtime. And all this is personal, just cost of the one big beautiful bill. No tax on overtime up to $12,000 per person, up to $12,000. All right. Once you start making over 150 when you're single, it starts to phase out. But that's insignificant. You just need to know it. So, what all this says is the only part that's taxable is the regular. So, if you make $20 an hour and your overtime rate is $30, it's time and a half. The premium portion is 10. So we subtract the 10. You just get paid regular time. So here's an example: 60,000 in wages, 15,000 overtime. Regular portion of overtime is 10,000. The premium portion is 5. So we deduct the 5,000 from your paycheck. There's a little box when you're doing taxes. Now I'll show you guys. All right. See that? Additional deduction. That's where it would go. All right. So let's show you what overtime. This is overtime example. This is an example of overtime on the paycheck stub. All right. 34 hours. The total was 28.42. But you got to get the regular time out. So there's a formula to get that out. So this is what you're looking at the paycheck. Because all W-2s didn't show it. They will start showing it after 26. So we do another formula, take it out, and we'll figure it. Here's somebody else overtime. All right. They had, can y'all see that number? $27,000 worth of overtime. So we did a formula, and it came out to be between 8,000 to 9,000 deductions they didn't have to pay taxes on. All right. This is what it looks like on the W-2. There is no formula. It'll just look like that. 7719. All right. And this is where this was going to show up on most W-2s. It'll show up there right there. All right. That's the flow. And that's the credit. 3,500 of tax deduction. 35 because of overtime. And that's where that person's tax bill, when I did the business, they had overtime and they had business deductions. That's why they only pay taxes on, their taxes is only 188. All right. All right. We got about 20-something minutes. Let me do something else. All right. This is the flow of all the forms. All the forms flow that way. One for the profit loss goes to the Schedule 1. Schedule 1 goes to the 1040. And then the overtime, additional deduction, Schedule 1A goes to the 1040. Okay. All right. So let's do this. I know we went over a lot, guys. Let's do this. I want to show you guys the W-4 because we're still doing, we're still supposed to be doing the withholdings. All right. Let me know if the withholdings came over. Do y'all see it?
Yeah.
All right. Real quick, we got about 12 minutes. We're going to do it. So this is the new calculator. Let me let you guys see it, how the website do it. All right. So it used to be a box down here. And, oh, nope, I ain't went over further enough. All right. So this is a new vision of the website. This is a new vision. Okay. All right. It used to be we can find the estimator right here in this slide bar. I haven't found it right there anymore. So actually, the withholding estimator is right here. Check your federal tax withholding. That's where it's at. And we're going to be helping folks do theirs. That's where it's at. We're going to hit check, and these are the questions. This is the new look. Okay. All right. So what I'm going to do, I'm going to do a I'm gonna do a real example just to show y'all the withholding. All right. Remember I told you guys how to look at if they're gonna owe or not owe. I mean, what they get paid. What I want to do, I'm bringing up a real person. Okay. Let me slide this over so you guys can see it. I'm not gonna put the PDF. Hopefully we can see it. If we can't see it, we'll make it bigger. Hold on. I'll make it bigger for you guys to see it. All right. So this is a really real person. And they have two, I'm gonna show you, they have two W-2s. Can y'all tell me why they got two W-2s? I mean, two paycheck stubs. I apologize. Two paycheck stubs.
They working 2 jobs.
There you go. I was wondering. I know it was real tricky. It was real tricky. All right. So I've never did example with two. This is a real person, real client. They have. So let's look at the first one. So when we look at the first paycheck, we see what the pay period is and we see the paycheck state. So let's look at this area. Their current paycheck, because I want y'all to, I'm gonna write this down so y'all can follow me. What did they make at this paycheck? Can y'all see it?
Yes, they made. Are you talking? The gross pay is $531.
There you go. That's what this paycheck is. All right, and the pay period is. I took it. I made it big up here, but it's actually right here too. What's the pay period?
Started March 29th and it ended April 11th.
All right, that's pay period. That's important. We're gonna need it. And the check date?
17/26.
There you go. All right. So we know what they got paid for that pay period. What did they make year to date?
$3,129.75.
There you go. All right. We're cooking with gas. All right. That's the first job. All right. We got one more thing we need off of this. How much taxes was held for this pay period?
$22.
Yep. $22.
Ooh, that's about $22.15.
Yep. How much for year to date?
$90.77.
There you go. All right. Those are the main things. Of course, we can use the 401k, but I'm not gonna go into it right now. All right. Let's look at the other paycheck. What do we need from here?
That date.
Yep, we need that date. The check date was 4/28. What's the pay period?
April 10th through April 23rd, 2026.
All right, cool. All right, what did they make? Hold on, went too fast. What did they make?
In this pay period, $669.60.
All right, cool. What did they make for the year?
$5,400.
5,432 year to date. Paycheck. All right, what was the taxes taken out? Federal.
For that pay period, $5.06.
Y'all see anything interesting? Just $5. They made $600. And only $5 came out for taxes. Year to date.
That ain't right, is it?
Taxes withheld?
Yep, year to date.
That's something fluky right there, ain't it?
It's real life, big dog. It's real life. It's so you saying it's so low, you don't want to call out the number. What's the number?
Somebody going to jail.
No, there's no jail. They just gonna have
$16.23.
They're gonna have a bill.
Yeah,
There's no jail.
Oh, that's gonna okay. I see what you're saying. They didn't pay enough.
Yeah, it's just because they only had $5 come out their check.
That's crazy.
All right, let me show you something. I ain't even got to highlight it. So the reason why it's important that I feel is important that we teach this for folks who get into business with us or get the product from us, just on its own, I don't have it highlighted, but let's go up here to federal. This is a single person. How do they got their withholdings? What do F stand for?
I believe that the reason they allow these
Actually don't know.
Single.
All right. What's the exemptions?
Zero.
Single and zero. So without understanding or without teaching this part or teaching them that, what more could they do? They ain't got exempt. They ain't got 12 exemptions. They did the standard math. I'm gonna claim zero. And just ain't, and this is all they're taking. Okay. So people need the help. So you guys got that. So let's go through this. Let me escape out so I can bring the estimate in. We got it. All right. So here's what the estimator says now. What you may need, what you need to expect is real, I want to say wording now. You can only use this tool if you got a job with an employer with a W-2 or a pension or annuity with federal income taxes withheld. All right. Let's just start the estimate. Let's go ahead. Let's go and see what they say. All right. I already started asking questions at speed time. They're not 65. This person is actually only 31 years old. All right. They're blind? No. Do they claim dependents? No. Can they be claimed as dependent? No. Which of the filing status would they use to file in 2026? They're single. All right. They don't have a spouse. Let's hit next. And this is what the calculated estimate looked like. All right. Job 1. And here's my point. Even though they may be hourly guys, I'm going to say for the sake of doing an estimator, it's much easier to do salary as long as you know how they get paid. Because when you say hourly, we got to have an average. You still got to you got to put up an average what they work. I can show you. So I'm just going to say salary to save time. All right. They're going to work all year. Every 2 weeks is their pay period. I had to ask that because one of the jobs didn't show it. Every 2 weeks. All right. I had to get it from them. All right. So let's start with the first one. The first one, it says, when did the most recent pay period in 2026 end? The most recent end.
April 7th.
All right. If y'all took notes, I already got it on here. It was April 11th. That's when it ended. Y'all remember it said 3/29 to April 11th. When did you get the check? We got the check. I think it said April the 17th. Am I right?
Yes.
All right. 2026.
You got to change the year for the April 11th too.
Yeah, I do. I mistyped. There you go. You got you. Yeah. It probably would have red flag because I ain't put that to there, but I appreciate you doing it. All right. Gross income for this pay period. That's why we asked it. What was that gross? I think it was 531.14. All right. Did you get a bonus? No, we're not going to put in the bonus. Estimated bonus? No, we're going to leave it blank. All right. What was the gross income you received so far? That's the year to date. All right. And that was 312975. No tips. We're not going to put that. Now we got federal taxes. What was the most recent paycheck stub? How much tax was taken out? In that example,
503.
that's not on this one. This is the first one. I'm doing the first check stub.
Okay.
It was like $22.50.
There you go. $22.15. Year to date was $90.77. All right. We're not going to put in the contributions. We're not going to do that. We're not going to even put in the 401k. We could, but we're not going to do it for training purposes. We'll come back. I did it for her just because I wanted to see it. No unemployment. No. All right. None of that. All right. No estimated taxes. So we got the first job in here. We got job 1. So let me search where they say. All right. So where we gonna put the other job at?
Add another job.
There you go. Boy, y'all cooking with gas, man. I'm trying to tell you. All year, every 2 weeks. Now, this check end when? See if y'all got on memory.
29?
23.
23, okay.
Yep, 23. When did the check get? The check was received April 28. All right. Gross for that pay period, 669.60. No bonus. Gross for the year, 5,412. No estimated taxes taken out. Y'all remember that? $5.
Yeah, $5. Crazy.
Year to date, 1623. All right. Didn't have a third job. None of this we're gonna use. No investments. We're gonna hit next. No student loan interest, no educated expenses. You see all the stuff that acts on the W-2 now? Cost of one big beautiful bill. No, we're not gonna put no IRA in it, no health savings account, alimony, no withdrawal, no military, no certain business expenses. Hit next. Standard deduction, use standard deduction. She's single. All right, hit next. All right. Cash contributions. Reason why it's there after we hit itemize, because we can get credit for it now. Up to 1,000 or 2. Right now we said single. It already got that the max is 1,000. See that? One of y'all didn't learn that. All right. Car interest. Reason why we can do car interest, because it's personal. You can put it on there if they got it. We're not gonna do it. We're not gonna claim the qualified business interest. I'm just showing you all the stuff they ask now. Any credits, child credit. They ain't have child credit because they don't have no children. If they go to school, we didn't cover them going to school. Adoption credit, foreign tax credit. All right. Mortgage interest credit. All right. Hit next. So I'm just going there so you guys can see it. Your withholding results. All right. So what stands out? What do you guys
not withholding enough taxes?
Oh, was that obvious?
Uh-huh.
When y'all seen the $5? So here's my point. I'm training you guys and showing this is a real life person. This person has owed for the last 3 years. And I told them they need to come in my office, so we got to fix the problem. So if they kept the process where they gonna keep it, they gonna owe next year $765. So the estimator assumes that you want not to owe. So it's going to tell you. It's going to tell you what your 2 jobs are. So let's hit the plus. And it's going to break down what their situation is. And you click on the job. We're going to click on the first one. The first one. Let's look at what it says. Let me see. Can I can click on it. And I also said we can read it without me clicking. I just want to click on the second one. All right, filing status, single, multiple job, don't check it. Credit total, leave blank. Other income, leave blank. Deductions, leave blank. Extra withholding, leave blank. Sign and date. So y'all see that I went through kind of fast, but that's what they saying the instruction should be. Y'all see that?
Yeah.
Let me look at the other one where she's making 16,000. All right, single. Don't check this box. Leave blank, leave blank, leave blank, extra withholding, enter 71. So you look at the W-2, click the pre-printed form, and this is what we had to take her and show her. This is what she need to go take to her job. She need to get the W-4, take it to her job, and make sure 71 is right here. All right. Of course, she got to fill this part out, but she got to do it online. They don't take paper. She goes and put it online. So this is what she got to put in as extra withholdings. All right. Definitely wanted to show y'all guys that. So that's the new W-4, and this person need to do that. And because we got to work with her, and because the only reason I did it, you guys don't have to do it. I just wanted to show the real life because she's a tax client. We only going to be doing the W-4 with you guys if they're going to be joining the business. But it's real for folks out there. So I don't know how you would work if you want to get to the point that you're doing actual work for someone. I'm not going to recommend you guys help someone with a W-4.
So
join the business.
So JT.
Yes.
Well, tax withholding, they're taking out extra $71. That's to pay the $700 she owed in taxes?
No, that's a great question, Terrence. That's a great question because I didn't go through the W-4 presentation. This doesn't mean they're taking out $71 out of the taxes. It doesn't mean that. It's just a formula they said put right there. All right. All right. Let me do something for you. Let me help you guys out. Let me do something. All right. Great question, though, Terrence. Great question. Because that is a common, that's an assumption.
So if she was to pay the $738,
Yes.
can she request extra money to come out her paycheck to pay for that? Or
No. Because here's the problem. I thought you asked me something else. There ain't no extra money coming out of her paycheck. All right. You remember the W-2?
Mm-hmm.
One job, she only had how much coming out? The one we changing.
I can't remember.
That's okay. Somebody else jump in because this is training.
We had $5 coming out, right?
$5.
Mm-hmm.
So what extra can she? Right now, she's not sending enough. So we got to tell the job for her to send enough until she decides she's gonna do business. Now, if I make this a business thing, then she got to decide to add business. But I would still tell her to fix the W-4 first, because I wouldn't want her to blame the business on why she owing more. I would tell her to fix it first so she can stop the bleeding. Then she got to prove to me that she's gonna be active in business. Yes, she may need it. She may need it. But this is just what it, and this 71 don't mean $71 gonna come out. That's the point I thought you was asking me. All right, so let me bring this up.
It is.
All right, so here's the point I want to make with that. So when I teach the W-4, we used to break it down. I didn't break it down to save time. But this is step 4. A, other income. Do you want to be taxed? This is what you're saying. You want other stuff to be taxed. All right. The first part is when we got kids. If you got kids, all right, let me take that back. All right. Oh, let me do the PowerPoint because I want you to see it a little different. I want to, because you actually, all right. That's the first part you got to fill out. This is instructions. Step 3. If your total income 200,000, single 400,000, and you got children, multiply the number of qualifying children under 17 by this number. If you put a child there, it ain't a 1, it's gonna be a multiplier. And both of them are just talking about kids. So if we put a number there, what that's gonna do? That's gonna decrease the check. That's gonna decrease what's coming out. This number gonna decrease what's coming out. It's gonna reduce it. And the only number they're going to use is this one. So they add these two up and it gets this number. All right. Step 4. This says you want extra money coming out. All right. So if you put a number right here for the other jobs, that's going to increase what's coming out and decrease your check. This is going, you want deductions, that's going to decrease what's coming out. And the point I want to get to is extra withholding. Extra withholding sounds like it's going to increase what's coming out. And that's a maybe. It doesn't mean it's going to increase. It means it's going to change the formula that it's already created based off the payroll department. It don't mean it might be $71. It may be 40. It may be 30. It's just a number that need to be put in place for the formula to work. All right, guys. So with that don't mean it's 71. But it do mean, yes.
Quick question.
Yeah.
For the longest, I think about before I came to my econ, I was filing 0 on my taxes for extra money to come out.
No, 0 wouldn't get you extra money.
How would that
check? Yeah, 0 wouldn't have got you extra money.
Okay.
So when it was that, you would have had to put a number. You would have had to put a number there for them to take less taxes. If you wanted extra money, well, let me make sure I heard you right. Extra money to come out or extra money that you wanted to get back?
When I was found, did I claim myself? I never did. I claimed 0.
Okay, so you was right. So you claimed 0 because you want to pick yourself up at the end of the year.
Right.
Right. All right. So yes, I had to re-listen to you. So that's correct. Yeah, that's correct.
Yeah.
All right. I had to listen to you again. You said the right thing. That was mine. So yeah, extra money to come out the check, you put 0. But just based off this example and the new tax code, zero might not be good enough. So did you learn that?
Yeah.
So for this person, the $71 right now would correct that.
700.
The $71 would correct the amount of the amount owed of 765.
Yes.
Okay, and then like that's before even introducing them or saying, well, maybe it's the way you can keep this if you start business.
No, she's still gonna owe.
Okay.
Still gonna owe.
Okay.
Because there ain't no way she can keep it. I need her, and so I want you guys to hear me out. I can encourage. We can talk about the business, but I want her to fix the problem first. Then talk about the business because I want her to be active in business. Because there's nothing I can show. Well, maybe we can go back to the calculator and say, all right, if you're gonna be active in business, let's go back. That's what it is. We could say this. Let me take your point of view. I think that's where we're going. All right, this is what you owe. And I don't show her the W-4. Personally, I would show her the W-4. This is what you owe. So what you could do is we need to get in business. We need to get in business. And let's go to where we get to adjustments. We can go here and do next because we can't click on them. One of the things we can't do, we can't click on the links individually. We got to go in order. So we're going to go to adjustments. And what we're going to give her expenses for as business, the best place to put it is here. And unlike the other one, we don't have a breakdown. We can't add the different expenses. We got to pretty much put them all together. They don't have an add button. This is still the spot where we're going to put business expenses in. So we can go one by one. So if you got in business, how much is your cell phone? We can use to write that off. Let's say she tells me it's $100. All right. Would it be safe to assume you can start using your cell phone 50% for business? She tells me yes. So we got to take some notes. Now, we ain't got the box to fill it in. For $50 for a cell phone, and we know it's May. Don't do it for June. We know it's May. So is that 6 or 7 months? May, June, May to December. Is that 6 or 7 months?
May is the 5th month or December is the 12th?
I think it might be 7. June would be 6. Is that right? All right, do it on our fingers.
From May to December is what you are crediting for the cell phone?
Yes.
So May, June, July, August, September, October, November, December. That's actually 8 months.
It's actually 8 months? That's why I wanted to do it. It's actually 8 months. And why am I doing that? This is a learning curve. We got 8 minutes before I shut down. Why am I giving a credit starting in May and not January?
Because she just got in business, so it's not. I mean, you can't.
She wasn't in business in January. She's just starting right now.
Right.
You see what I'm saying? She wasn't in business in January. All right. So we're gonna do 8. 8 times 50. I think that's y'all do the math. Let me do some calculator. So that's what's different about the estimator. It won't add it for us. We gotta add everything up for ourselves. So I think it's 400, but I'm not gonna rely on my math. So somebody got the calculator? Is it 400?
No, but 80 times 5 is 400.
There you go. See? All right. So we got to write a sheet. And this is us talking to the prospect. So $400 could be a deduction because it's an estimate. Yeah. All right. She joined the business. She's going to join the business for $100. What's the sign up? Ain't it 100?
Mm-hmm.
All right. We're going to give her credit for $100. All right. We're going to ask her, hey, how far is your job? We're going to come up with some miles. How much miles you put on your car? A year. Let's assume she tell us 10,000. We got 8 months. I'm going to cut it in half, just say half. So is it safe to assume that if I teach you how not to go straight to work, we stop at a temporary location, you pick somebody's interest and go to work, would you be able to do that? So if you're driving 10,000 miles, we're going to assume it's 5,000. 5,000, we're going to write off. Y'all see where I'm going? Hey, how much is your internet bill? She tell me her internet bill is $70. 70 times 8. Do the math on that. Let's see what it is.
Okay, 70 times 8?
Yeah, 70 times 8.
560.
$560?
Mhm.
Now we gotta add all those up. That's all her deductions. We don't have any separate no more. So we gotta add all that up. So I'm gonna add all up. I'm gonna add the 400. I'm gonna add the 100. I'm gonna add the 5,000. I'm gonna add the 560. So that's 6,000 business deductions. Technically, she can have if she says she want to do business and she go to work right now. And let's see what it does. Let's go through the old. Let's go through it. Well, this is what we could tell her. This, so that right there reduces 700 to 141. So now that we know that, we got to have some more expenses, but that could help. It could help. So we can have her not change it. But the problem of her not changing it, in my opinion, here's a challenge of her not changing it and trying to use the business to eliminate it. If we go back and try to teach her, she has no extra money because she's never been seen it. She's already used it in her everyday living. Because when I tell someone to change, when they change their W-4, the extra money is supposed to be used for what? Debt and investment. It ain't supposed to be used for the everyday spending. So we got to create the extra money. So when she identifies it now, she can put it towards other things. She got to know that she got to put it towards her debt. She got to know that I get $80-something extra. Right now, she only hit 5. But when we tell her to change it, we fix it. She got no more debt. She got business expenses. And if she gets better at business, then we can go back and change it. Then she can get the extra and put it to work for her. Guys, that's my time. We got 4 minutes. You got 4 minutes worth of questions. I know we went through a lot. Did we learn anything
about car interest? Giving her car interest or something. I don't exactly remember about the car interest. Do you only get that when you gave us the special note about the newer cars? Is that the only way that you can get it? Like, did she get it because of that rule?
What did she get?
You said
I'm gonna cut it up. I didn't. What deduction?
I thought you mentioned her the interest on her car or something like that.
No, I didn't mention. I said it's a deduction, but I didn't give her.
Okay.
I didn't assume she bought a car.
Okay.
Right. I didn't give her none of that. Yeah. I didn't. The interest on the car, it has to be new, and it has to be the interest.
Okay.
So, but she didn't have a new car. So the only deductions I gave her for a W-2 is what she can create. The 5,000 was the mileage she's going to be driving to work now. That she's not going to go straight to work. I'm assuming she's going to drive the whole 10,000.
Okay, I might have just misheard you then. Okay.
Yeah, that's my mistake then if I gave you the interest.
Okay, I got you.
All right. It was a lot. Did we pick up any questions? We got 3 minutes now.
Well, I just learned something. I learned a lot.
All right. That's what the W-2. That's what the new W-4 estimator looks like. All right, Terrence. I'm gonna turn it back over to you, big dog.